one of my favorite top of show guests. Say hello to the great Jose Torres, senior economist at Interactive Brokers. My man, thanks for being here as always.
Always a pleasure, JD. Fed day tomorrow, getting the speculative energies back. You just said Bitcoin above 94,000. Russell 2000, new record for the small caps. That basket is going to benefit disproportionately from monetary policy loosening. 93% odds of a Fed rate cut tomorrow. 2 to 4 dissenters according to our prediction market.
Yeah.
As far as Chair Powell, he has after tomorrow, January, March, and April, and then in May, presumably there'll be a new Fed chair. Our prediction market around 80%. It'll be Kevin Hassett, National Economic Council Director. He came out today in favor of a 50 basis point reduction tomorrow.
50 basis point cut. But obviously there's different reasons why the Fed could cut. It's either because on the one hand you got control of inflation, but on the other hand there's also not so good reasons that you cut interest rates. Deterioration in labor market conditions. What are you looking for as we hear from the FOMC this time tomorrow?
Well, JD, first let me talk to you about the labor market data that came in today.
Yeah.
ADP numbers, we got a reversal in the new weekly indicators, which are terrific to look at. JOLTS, we got September and October. Huge beats, seeing a comeback in labor demand. Small business optimism, also beat to the upside, driven by stronger sales expectations, as well as plans to add hiring. As far as what I'm going to wait to hear from for the Fed, the most important thing is going to be how many rate cuts the committee envisions into next year and what's the level of disagreement on the committee, because things can get quite heated. We can see in 2026, mid of next year, we can see a Fed that we haven't seen in a long time. We're going to have constant hostility, meeting after meeting, because the president is going to be more involved in the monetary policy decisions.
Yeah, easy to see why so many outside observers say the Fed is a much more political monetary policy body it is today than maybe it's been in years past. Talk to me a bit more about the dot plot, the summary of economic projections. We only get them 4 times a year, but to your point, even if the ultimate truth does not always align with what the dot plot actually is, it still gives us a pretty good roadmap as we finish 2025 for what's on their horizon for the next year.
Yeah, I think that 2 cuts on the dot plot next year, I think that'll certainly pave the way for a Santa Claus rally into year end.
Yeah.
You know, 1 cut, we'll have to wait and see what the commentary is like and what the general mood is. And then 0 cuts, that's a really low chance. But if 0 cuts, that'll reflect some caution on behalf of Wall Street and investors will refrain from wanting to make any big, bold bets like they did today and yesterday. By the way, another reason why interest rates are catching a lift, not just the strong economic data we saw, but also you have central banks all around the world. Japan is hiking. Australia, their next move is to the upside. ECB, it looks like their next move is to the upside. Bank of Canada has a decision tomorrow. They are looking like they're going to hold for a long period of time. So the Fed is increasingly on its own in terms of a central bank that's cutting at this juncture.
Yeah, you mentioned Santa Claus rally historically. That's the last 5 trading days of one calendar year, plus the first 2 trading days of the next calendar year. That for us here on Wall Street this year aligns for a start on Christmas Eve, December 24th. We'll see if Santa comes to town here. Before I let you go, what's been top of mind for earnings? We still got a handful of key names reporting today and tomorrow.
Absolutely. We have some dovish developments tomorrow on Fed Day. Pair that with Adobe, Oracle, and Broadcom. Strong developments on the AI front in terms of expected returns as well as strong capital expenditure plans, and that can absolutely pave the way to 7,000 on the S&P 500 by year end. And I'm expecting the Russell 2000, it's been a long time, it's flat for roughly 4 years. I'm expecting with strong fiscal stimulus, monetary policy easing, I'm expecting those small firms to really have a nice rally next year, maybe 25%.
All right, I like that year-end price target call, by the way, on 7,000. You're not a lot. That was the original price target that a lot of firms on Wall Street had this time last year, but 'tis the season to revisit a lot of those end-of-year price targets. And we got to leave things there. I could talk with you all day. Jose Torres, senior economist at Interactive Brokers. Thank you for kicking us off as always.
My pleasure.